Hi, welcome to Morgan's Best Ideas update for May 2020. I'm Andrew Tang. Well, the market has certainly been on quite a ride over the past few weeks, bouncing 20% off its March 23 lows of 44.02. So while opportunities aren't as plentiful as they were 5 or 6 weeks ago, but we still see plenty of opportunities and scope just given the big divergence in valuations across our market, with the really expensive end being healthcare and IT, or the structural growth stories, whereas we're seeing resources and financials really struggling, and that's where we think certainly a lot of the opportunities are. For this month, we have made a number of changes to our best ideas. We have taken up A2 milk, so we've removed that from the list this month, just given how well it's sort of held up over the last few weeks and over this COVID-19. We still see it as a quality company and obviously considered a essential service, but just given valuations look a little bit full now, we have taken it off the list. We have added Flight Centre. Flight Centre is one that we've liked for some time now. Just given the pullback and the capital raising done. We saw a great update from the company recently, just saying that conditions are probably no worse than feared at the moment. So we believe that Flight Centre now has more than enough liquidity to weather a downturn in travel. We think it's attractively priced, even in a zero revenue environment. If we were to exclude the $350 million worth of liquidity required under its covenant, we think that Flight Centre has more than sufficient liquidity to withstand between 13 and 15 months of zero revenue. So in a very strong capital position now. It's our view that restrictions on domestic travel could be lifted, which we're seeing in the next 2 to 3 months as borders reopen, and certainly business travel returning shortly after that as well. We also have added Computershare into the list, obviously a large cap there, now trading on 14 times 12-month forward PE, offering you about a 3.5% yield. We think it's through the worst of the downgrades on the back of lower bond yields, and we think that there's now long-term value in that name. Despite some headwinds still persisting on lower bond yield, we see areas of upside for the business just around the capital raisings and corporate actions. We see delinquent loan servicing in their US mortgage servicing business. We're seeing inbound inquiries really ramp up there, and a rise in bankrupt administration activities just given the tougher economic climate in the US. So they're two stocks that we have added to our best ideas list. They are our 12-month best ideas across sectors. So just to give you an idea of some of the other names in there, in the large caps we have Telstra, Aristocrat, Coles, Woodside Petroleum, Macquarie Group, Westpac, Sonic Healthcare, Horizon, Amcor, Rio Tinto, BHP. We now have Computershare, AGL, and APA. Also in the mid-cap space, we currently have REA, Domino's Pizza, JB Hi-Fi, added Flight Centre this month. We've got Beach Energy, Magellan Financial Group, ResMed, Cleanaway, Oz Minerals, and Spark Infrastructure. So just as a reminder, they are our best sector ideas across our coverage universe, across our 26 analysts in the team. So they're the stocks best placed to weather the storm and outperform over the next 12 months. Thanks very much for tuning in, and we'll speak to you again next month.